we're looking at cash budgeting. The word cash refers to money, so bank, if you're looking at it from an accounting point of view. When looking at budgeting, the purpose of it is basically to analyze inflow and outflow. Okay, because businesses operate or continue to operate if they continue to manage their money. Okay, so businesses operate if they have good cash management. Right, so the only thing that you can do to make sure that you're following the right process or that you're doing the right thing is if you are going to manage or forecast the future in terms of what you expect to receive or pay. Right, so obviously receipts are good, payments are bad. When you're looking at a budget, because this is a cash budget, you're looking at cash flow. So don't worry about accounting. Forget about income and expenses and just focus on, is money coming in or is money going out? Okay, so if I had to buy an asset, that would be good or bad from a cash flow point of view? Buying an asset, it would be bad, okay, because you're going to have to pay money in order to get that asset. But if you were selling an asset, that would be good from a cash point of view. Okay, if I sell the asset, I'm going to receive more money from that asset that I've sold. Right, so when looking at cash flow, you need to think about inflow versus outflow. That's the key. Is money coming in or is money going out? And if you know what's happening, then it's easy to do a budget. Right, so all budgets will have a list of information, okay, depending on how detailed the budget is. Right, so let's create a question. We're obviously looking at budgeting. If you look at the required will probably be at the end of the question, not at the beginning. Okay, but I'm starting with because I'm creating my own question. Okay, the required will be something along these lines. Budget or create a budget or prepare a budget for the first quarter of let's use 2020. Okay, we're at the end of 2019, so we're moving into the new year soon. Okay, if you're a company, let's say you're running a business, you're obviously going to want to project and forecast what's going to happen in the next year. Okay, you could do it for 12 months, you could do it for 24 months, you could do it for 36 months. It doesn't matter how long the budget is, but the longer the budget, okay, when I say longer, I'm referring to the time frame budgeted for. Okay, so if I'm budgeting for the next 5 years, how valuable do you think that budget's going to be? Very, very valuable, very accurate, not very accurate if it's for 5 years. Do you know what the costs are going to be in 5 years' time? Probably not. Okay, if you think 5 years ago, what did you pay for stationery versus what do you pay for stationery now? It's probably different. It's probably changed. Okay, it might not have changed much, but if you look at something else like fuel, petrol, okay, that could have changed a lot. 5 years ago to now, okay, how much is the price of petrol? Right, so it depends. You don't have to answer, but I'm just saying, consider those things. Okay, so with a budget, the further forward you go, in time, the less accurate the budgets. Okay, and that's the only problem with the budget, and that's why normally you want to revise and constantly update your budget because things change. Okay, and a budget, remember, is never accurate. With budgeting, it's just a guideline. It's a guideline in terms of spending, it's a guideline in terms of income, it's a guideline in terms of running the business. Okay. what do we have to spend our money on, and where we're going to get the money to pay for it. Okay, so the question could be something like that. Prepare a budget for the next quarter of 2020. Okay, let's say we're running a business that's ABC Limited. Okay, we're a company selling goods. Doesn't matter what we're selling. We can be selling a product or a service. It makes no difference. The only thing we're going to be looking at, what's coming in, what's going out, and that's it. Okay, so they have to give you information. Given information. And this will be part of the question. Right, when you get information, it will either relate to receipts or it will relate to payments. Okay, you need to decide. Is this a receipt calculation, like a bit of information, or is this a payment calculation information that I need to use, basically? Right, so let's say point number 1 says total expected sales for the next 3 months starting January 2020 is 1 million. The expected sales are separated according to the financial manager's past experience. Sales are 40% in Jan, 30% in Feb, and 30% in March. Okay, another point they'll probably give you. Total credit sales amount to 40% of total sales. Okay. Then they'll give you more information and they have to tell you something about the collection. They'll say credit sales are collected according to the following information or the following schedule. Okay, that's what they're going to give you in terms of information. It'll all come from the question. Okay, we'll do some of your examples just now that you've either looked at before or going to look at. Okay, if you've got your test papers, then we'll look at maybe one of those first, just to see how the budgeting is asked there. Okay, but it'll be the same. They'll either give you more information or they'll give you less information. It doesn't matter how much information they give you. Okay, what do you have to do? Look for the income and look for the expenses. That's it. Okay, so we need a schedule of receipts. We can say maybe 70% is collected in the month following the month of the sale. Okay, 20% is collected in the second month following the month of the sale. And then 10%, or let's do 5%. How much do I have? I've got 90. 5% is collected in the third month following the month of the sale. And then let's say 5% is written off as irrecoverable. Right, so that's looking at the receipt side of things. Okay, then they're probably going to give you something about payments. Right, they could maybe say with purchases. So we can say purchases are, let's say 40% of the total. Let's be more specific. Let's say total purchases are 40% of the total sales in the or for the, actually let's not complicate it, let's keep it simple. Total purchases are 40% of the total sales. That's simple enough, right? Okay. Another point that can maybe say, of the total purchases, 30% is credit purchases. Okay. And then number 6, all credit purchases are paid for in the second month following the month of the purchase. Okay, and then we can put a few other things here. Salaries and wages for staff amount to 50,000 per month. We can put something else. Depreciation is 10% per annum, straight line method. Let's add a few more. SARS income tax paid. SARS tax paid in February 2020 amounting to 26,000. Okay, let's do one more. A new server is purchased in January 2020 and will be paid off monthly starting January, or let's say starting February 2020. Total retail price is 100,000, paid off in equal monthly installments for 2 years. Okay, that's what you've got. Right, so the point I'm trying to make here with our question, okay, remember this is just an example. Okay, I'm just showing you stuff that could come up in your particular question. Okay, it doesn't matter what the budget looks like in terms of the question, in terms of the information. Okay, remember, you're going to have to read this information, you're going to have to interpret this information, and then you're going to have to create a budget. Okay. Alright, so that's the given information from the question. Let's take the required. Let's add it at the bottom. Okay, so you've got it. Right, and that's what the question will look like. That's the information that you're going to have to be given in order to create a budget. Right, then the examiner, they're either going to give you a template, okay, an answer sheet, to complete and to fill out the information, or you're going to have to draw it up. Okay, so this is something that you're probably going to have to study, or you're going to have to just look at in your answer book, okay, in your answer sheets. Right, so format for the budgets. Okay, and there are lots of different formats. Okay, but the main, let's say, purpose of the budget is to group receipts and payments. Separate, then summarize. Okay, so I'm just going to give you my formats. Okay, we'll look at whatever format you've got in your test paper, okay, your past paper. Right, so my formats. I'm going to start with receipts. This is the receipts section. Okay, obviously I'm budgeting for how many months? First quarter. How many months in a quarter? 3 months, correct. Okay, so we're going to have January 2020. We're going to have February 2020. We're going to have March 2020. Okay, those are the 3 months that we are going to be budgeting for. Okay, and those are important months to look at. Why? Because that's the budget. Okay, the budget is going to be for those 3 months. Remember, those 3 months haven't taken place yet. They're going to take place. It's based on your expectation. Okay, what you think is going to happen in the future. Okay, so with your receipts, we're going to have to analyze different things. We obviously need the month. Okay, Then we need to look at the total sales. And remember, total sales. Sales is income, right? I'm going to sell something. I can either sell something for cash or I can sell something on credit. Those are the only two ways of selling something, right? You're either going to sell something where people owe you, or you're going to sell something where they give you cash. Okay, so the cash sales and the credit sales. Okay, that's what you've got. Okay, again, those are columns and those are workings. I can actually put blocks around all of these, actually. Okay, there we go, blocks. Right, we need to go back and we need to look at our question. Okay, maybe let's just give you a few other amounts here just to add to the question because it's a bit too short. I'm going to just put a few more months here. Actual sales for November 2019 was, let's use 50,000. Okay. December 2019 sales were, let's say 70,000. Okay, just to add more to the question. Right, so we've got a bit more to work with. Right, so I've got November, I've got December, I've got January, I've got February, and I've got March. Okay, obviously, you're going to have to start with the earliest date that you've got. Okay, so what date do I have? December, November, which is the earliest date? November. Alright, so when looking at my receipts section, things start in November, then December, then January, then February, and then March. Okay, those are the months that you're going to be analyzing, right? Okay, because you're going to have to see, well, how much did I make in terms of sales? How much of it was cash, which is what I actually get when I make the sale? And how much of it is credits? Okay, do I get the credit sales immediately in terms of receipts?
Yes.
No, the receipts don't come immediately. If I sell something to you today and it's on credit, when do you pay me? If I sell something to you on credit, when do you pay me?
When I can.
When you can in the future. Okay, so if I give you 30 days to pay, you pay me after 30 days. Sometimes you pay me late, 60 days, 90 days, and that's also consideration. So all of that is based on this, the collection. Okay, when do you collect the amounts that are outstanding? Okay, so if this is the receipts section, and I've got January, February, and March. Okay, I need to predict what's going to happen in January, February, and March based on November, December, January, February, and March. Okay, so now I need to go look at the information. Okay, remember, this section is looking at what? Receipts or payments? Receipts. It's the receipts section, isn't it? Okay, so if I'm looking at receipts here, what information am I going to look at? The receipts. Okay, so if you read those 3 points again, okay, we spoke about them when I was creating the question. Okay, number 1, number 2, number 3 all relate to receipts. Okay, they talk about sales, they talk about collecting, they talk about being owed money and being paid money later on. Okay, so all of that is looking at receipts. Okay, here at the bottom, purchases, salaries and wages, depreciation, tax paid, purchases. Okay, these are all payments. Okay, so I'm not going to look at the payments now. I'm looking at the receipts. Okay, so receipts go with the receipts, obviously, right? Okay, you're not going to look at payments if you're looking at your receipts. Right, so here at the bottom, when I'm drawing up my budget, what am I looking at here? Receipts. Okay, so the receipts are going to be broken up into total sales, so everything I sold, the stuff that I sold for money that I get when I sell something, and the sales that I sell but I'm going to collect later on. Okay, so in November, how much did I sell? 50,000 in November. Okay, so November, how much did I sell? 50,000. Okay, December, how much did I sell? 70,000. Okay, January, do I know how much I sold in January? No. Can I work out how much I sold in January? Yes, I can. Right, so what did they say? They said you expect sales for the next 3 months starting in January to be $1 million. Okay, but it's $1 million for how many months? For 3 months. All right, then they tell me sales are 40% in January, 30% in February, and 30% in March. So what must I do? I need to split the total, don't I? Okay, because the information is given to me like this. Okay, then I've got to separate it. Okay, so yes, because that's what they told me. They said the total sales for 3 months is $1 million. Okay, that's what I expect to sell. Okay, I expect to sell $1 million in the next 3 months. Okay, based on my expectation, I'm going to make 40% of the sales in January. Okay, so what's 40% of $1 million? Use your calculator. Don't be afraid to use that thing. Okay, you're going to have it in your exam anyway. Okay, so 400,000. Okay, then I have how much in February? 30% in Feb. Do you see that? Okay, so 30% of $1 million? 300,000. And then I'm also going to have 30% in March. Okay, another 300,000 in March. Makes sense? Okay, what is that representing? The total sales. Okay, and that could be a target. That could be a goal. That could be something that you're striving towards. But because remember, budget is just what you expect. Okay. Cash and credits. Now we need to look at these columns. Right, of the total sales. So in other words, if I sell and I have the total, how much of it is cash and how much of it is credit? Well, in the question, what did they say? They said total credit sales amount to 40% of total sales. Right, so can I work out the credit sales from the total sales? Yes, because remember the total sales represents everything, right? So if I sell 100, how much of it is cash and how much of it is credit? So if I read the information tells me that 40% of total sales is credit. So which column am I looking at? This one. %40 of the total. So if 40% is credit, how much is cash? If 40% of all my sales is credit, how much is cash? 60%. Yes, the rest, 60%. Okay, so now you know what the cash sales are and what the credit sales are. Okay, it's based on what? Your expectation, based on the information. Right, so total sales is 40%. Total credit sales is 40% of the total sales. Okay, so where are my total sales? Here. How much is 40% of that? There. 40% of the total. 40% of this, 28,000. Credit sales, 40% of that, 160. Okay. 40% of this, 40% of this. Right, because the question said 40% of the total sales is credit. Right? Okay. So now you've got the cash sales and you've got the credit sales. Here, we're looking at the columns, January, February, and March. Okay, remember, this is a cash budget. So I'm only going to look at cash flow. If I'm looking at receipts, I'm looking at inflow, not outflow. Does that make sense? Okay, so do I receive cash sales? Yes, I do. That's a receipt. How much would that be? 60% of this. Do you agree? Okay, or you could say this minus that. It doesn't matter how you do it. Okay, it's what's left. Okay, have a look. This minus that gives me that answer, or 60% of the total. Same answer. Doesn't matter. Okay, so now I have all the cash sales, and I have all the credit sales. Do you see that? Okay, now all I have to do is predict how am I going to collect this money. Okay, obviously cash sales will be collected in the month of the sale, right? When you sell something, you collect the money. Okay, the problem is here. When you sell something on credit, do you collect the money? No, you don't. It gets collected later on. And that's why you've been given this. Okay, point number 3. Credit sales are collected according to the following schedule. I expect to collect 70% in the month following the month of the sale. Right, when you look at budgeting questions, the tip that I can give you so that you don't make mistakes is to go through the process line by line. Okay, don't do it column by column. Okay, you can do it whichever way you want. Right, you can either do it the difficult way or you can do it the easy way. Okay, the easy way, go row by row. Don't try to do it column by column. Row by row is easier. Okay, so if I look at this row, what month am I looking at? I'm looking at November. Forget about all the other months. Ignore them for now. Right, if I'm looking at November, and I'm only looking at November, I'm going to be focusing on that. The credit sales. Do you see that? Okay, so according to the information that we've been given, when do I start collecting this credit sale? 70% in the month following the month of the sale. So what month would that be? December. Do you agree? Okay, so if I sell on credit in November, I'm going to collect in December. Right? How much am I going to collect? 70%. Is December part of our budget? No, because I'm looking at January, February, and March. So I don't need it. Okay, look at the next line. 20% is collected in the second month following the month of the sale. What is the month of the sale? November. What is the second month after November? January. Agree? Okay. How much do you collect in the second month following the month of the sale? 20%. So, if the month of the sale is November, the second month would be January. How much do I collect in January? 20% of the credit sales. Is January part of our budget? Yes. That's why you've got to put something there. 20% of the credit sales. Make sense? Okay. Go back. I'm still looking at this 1 month. I'm still looking at November. Right? Okay, the month hasn't changed. I still sold in November. But now, 5% is collected in the 3rd month following the month of the sale. What is the month of the sale? The month of the sale is November. That's the month of the sale. I sold in November. What is the 3rd month following the month of the sale? February. Agree? Okay. So, if February is the 3rd month, how much do I collect in February? 5% of what I sold in November. 10,000. Oh, hold on. 5%. Ooh, that's 50%. I wonder, that's too big. 0.5. 0.05, that's 5%. Yeah, 1,000, that's better. Okay. Does that make sense? Right, so, have you looked at November now? Not quite. The last line. 5% is written off as irrecoverable. I should say after or in the 4th month. Let's be more specific. Okay, is that a cash flow? What does it mean to write off bad debts?
To cancel them.
Yes, to cancel it. Right, so you owe me, but in month 4, you can't pay me. What do? I write it off. Okay, is that an outflow? No, I don't lose money. Is that an inflow? No, I don't get money. Okay, so for things like this, bad debt. Bad debt is a non-cash item. Okay, am I looking at non-cash items? No, because I'm looking at a cash budget. Okay, if I'm looking at a cash budget, I only want cash items. Items that have an inflow or items that have an outflow, and that's it. Okay, there are lots of different accounting non-cash items that could exist. Here's another one here at the bottom. Depreciation is a non-cash item. Would you include that in a budget? No, I wouldn't. Okay, depreciation is an expense if you look at the accounting part of it. Alright, so an expense means I've lost something. But I haven't lost money. Okay, depreciation is the loss of value. Okay, I lose value from using the vehicle. I lose value because I've used the machinery. Okay, the equipment, whatever it is. Okay, so you're probably not going to get it, but if you do get it, you don't put it in the budget. If you have non-cash items. I'm just showing you things that you could have. Okay, we'll look at your questions to see what type of question you have to answer just now. Okay, so that's what you've got. Bad debt, you don't include in the budget. Right, so have I looked at November? Yes, I have. November's good. Complete. Now we need to look at the rest. Okay, what month am I going to look at now? December. Did I sell on credit in December? Yes, I did. 28,000 Rand worth of sales were credit sales. When I have credit sales, I need to follow this because it's a delayed receipt. I sell something to you today, you come back and you pay me next month, or the month after that, or the month after that. Okay. So, what is the month of the sale? December. That's the month that I'm looking at. Okay? According to the schedule, 70% is collected in the month following the month of the sale. What is the month of the sale? December. What is the month after the month of the sale? January. How much do I collect in January? 70%. Is January part of the budget? Yes. So, times 70%. Okay. I'm still looking at December. December is the month of the sale. Line number 2 says 20% of that is collected in the second month following the month of the sale. What is the second month following the month of sale? If the month of sale is December, February. How much do you collect in February? 20%. Times 20%. See that? Okay. Still looking at December. December is still the month of the sale. Okay, because I sold in December, but now I'm looking at the collection. Okay, so December is the month of sale. Line number 3 says 5% is collected in the third month following the month of the sale. When is that? February is the second month. March is the third month. Okay, so if I sold in December, month 1, January. Month 2, February. Month 3, March. Agree? How much do I collect from the sale in March? 5%. So, of December's credit sale, I'm going to collect 5% in March. Does that make sense? Okay. And then the last one, again, I've written off bad debt. It's not a cash flow. You don't record it. Make sense? Okay. Next line. Now I'm looking at line number 3 here. I'm looking at January. Okay, January is the month of the sale, right? Let's go back. Read this again. Line number 1. 70% is collected in the month following the month of the sale. The month of the sale is which month? January. There's the credit sale in January, right? How much do I collect in the month following the month of the sale? 70%. What is the month following the month of sale? February. Good. Okay. Does that make sense? Alright, so in February, I'm going to have this times 70%. Because that's the month following the month of the sale. Right, I'm still looking at January's credit sales. Line number 2. 20% is collected in the second month following the month of the sale. The month of the sale is January. What is the second month following the month of the sale? No, the second month. March. If January is the month of the sale, the second month would be March. How much do you collect in March? 20%. This times 20%. Okay, what else do I have? Well, I still have February. Okay, well, maybe let's look at all of it. If I'm looking at January, what's the third month after January? April. Is April part of the budget? No. So do you record it? No, you don't. Okay, you're budgeting for January, for February, and for March. Okay, month number 3 after January. January is the month that I'm looking at. Month 1, Feb. Month 2, March. Month 3, April. April's not part of the budget. I don't need it. Not necessary. Does that make sense? Okay. Okay, next line. See, line by line by line by line. That's how you do a budget. It's the best way of doing it. So you always get it right. Okay, February. Credit sales, 120,000, right? We know what that is because we worked it out. I'm using my working. Now I'm looking at the collection. If I've sold 120,000 in February on credit, when do I start collecting? 70% is collected in the month following the month of the sale. If the month of the sale is February, when do I collect? March. Is March part of the budget? Yes. 70% collected there in March. Okay, I'm still looking at Feb. 20% is collected in the second month following the month of sale. So what's the second month following Feb? April. Is April part of the budget? No. I collect 20% in April, but I'm not going to show it because I'm only going to look at January, February, and March. Okay, so I don't have to do anything else. I stop there. Right, and then there's nothing else to do because obviously, if I look at March, when do I start collecting March? In April, and then May, and then June. Okay, I don't need it for the budget. Right, and there you go. You've done the receipts part of the budget, looking at the credit sales and the cash sales. Right, so let's summarize. Total cash receipts, brackets, total inflows. Okay, what inflows did I have? Cash sales and receipts from debtors. Collecting credit sales, basically. If you don't understand that. Okay, the accounting. Okay, we did some accounting last week. Hopefully you know what a debtor is. Debtor is an asset. Those assets create income. Okay, or you collect the outstanding amounts. Right, so cash sales. How much cash sales do I have in January? Yes, there's the cash sales in January, not so? Okay. How much cash sales do you have in February? Correct. How much cash sales do you have in March? Correct. 180, 180. Good. Okay, notice, what is that? The cash sales. Okay, we're summarizing at the bottom. Okay, receipts from our debtors. How much receipts did I get from my debtors? Well, for January, I need to tally up. Do you see that? Okay, so I need a little subtotal here. Because I've got all these amounts, and I need to know how much the collections were. Does that make sense? Okay, so if I sum up January, and if I sum up February, and if I sum up March, that's going to give me the totals. Okay, so those are the totals for January, for February, and for March. Agree? Okay, and that represents what? The receipts from my credit sales. Make sense? Okay, so this line over here is going to show that all the receipts from your debtors. Okay, in other words, your credit sales for those particular months. Right, then I can summarize and I can add up all my receipts. And I can put a heading here. Total receipts from, or total receipts. Cash inflows. Okay, so what are my totals? Let's check. Sum up. Sum up. Sum up. See that? Okay, so that's what you've got. Those are the totals, right? Okay, those are the amounts that you've got in terms of your receipts. Okay, so the receipts represent inflows, money coming in. Okay, in a budget, do I only look at money coming in? No, I've got to look at money going out. So, second section. cash payments. Okay, earlier we spoke about the information. This related to our receipts. This relates to our payments. Right, so all of this stuff here at the bottom is going to relate to this section here in the budget, the cash payments. Okay, so I first need to analyze my purchases. I'm going to have the same months. November, December, January, February, March. Total purchases, cash purchases, credit purchases, or creditors. Alright, so now you need to do the analysis. Okay, you need to do the workings. You're still looking at the same months, but now you're not looking at receipts, you're looking at payments. Okay, so let's go get the total purchases. Let's go to the question. Let's read it. Okay, what are the total purchases going to be? 40% of what? Of the total sales. Correct. Okay, so whatever you sell, 40% of it is the purchases. Okay, purchases are 40% of the total sales. Okay, whatever the sales are. Okay, so let's put that in. Total purchases for November, 40% of 50,000. Does that make sense? Okay, because they said here, 40% of the total sales is the total purchases, right? Okay, December's, 40% of that. January's, 40% of that. February, 40% of that. March, 40% of that. Does that make sense? Okay. Now you've got the total purchases. That's everything. Everything that you buy. Okay, go back to the question. Of the total purchases, 30% is credit purchases. So what does that tell me about the total? 30% is credit and 70% is cash. Does that make sense? Okay, so I need to split it. What is the cash and what is the credit? 70% of this, cash purchases. 30% of this, credit purchases. Okay, obviously if you add the two together, you're going to get the 20,000. You're going to get the total. Okay, because whatever you buy, some of it will be cash, some of it will be credits. Okay, that's how you buy stuff, right? You either buy stuff with your own money or you buy stuff with other people's money. Okay. And then I do that for all of them. Split 70%, 30%, 70%, 30%, 70%, 30%, 70%, 30%. Okay, now I've shown it. Okay, these are cash purchases. These are credit purchases. Okay, again I need to do an analysis. Let's use this color, it's fine. Blue is okay. Okay, 30% of total is the credits. Okay, when do I pay these credit purchases? I need to go look at the information. Okay, point number 6. All credit purchases are paid for in the second month following the month of the purchase. Do you see that? Okay, so, same as before. Look at it line by line by line. Okay, I'm going to look at that line, November. Okay, Did I buy on credit? Yes, I did. How much did you buy on credit? 6,000. Okay, I bought 6,000 Rand in November. Okay, this month. When am I going to pay for it? In the second month following the month of the purchase. So if I buy in November, month number 1, December. Month number 2, January. That's when I pay for it. Good. Okay, so do I pay this in January? Yes. Make sense? Next line. December. How much did I buy in December? 8,400. Okay. Of December's purchase, the credit purchase, when do I pay? Go read the question again. All credit purchases are paid for in the second month following the month of purchase. So if I buy in December, when do I pay? No. December. Second month after December? February, yes. Okay. December is the month that I purchased. First month after December, January. Second month after December, February. So when do I pay? February. Make sense? Okay, I'm looking at January now. So I'll buy stuff in January. When do I expect to pay? No.
In March.
Okay, January is the month that I bought goods. Okay, I bought 48,000 Rand worth of goods in January. All the credit purchases are paid for in the second month following the month of the purchase. When did I purchase? January. When do I pay? Second month. What's the second month after January? March. That's when I pay 48. Make sense? Okay, I buy stuff in Feb. When do I pay for it? In April. Second month after the purchase. If I buy stuff in March, when do I pay for it? In May. Second month. April and May, not part of the budget, so I don't need to show those two. Make sense? Okay, and that's it. There could be more depending on the level of difficulty in the question. But now you've got the payments. Right, again we have to summarize. So, total cash payments. Total outflows, in other words. Okay, so what outflows do I have? Well, I have the cash purchases. When I pay using cash, I'm going to have to give somebody money. Okay, cash purchases. Then I've got the payments to creditors. Paying credit purchases, in other words, right? Okay. Right, so how much cash purchases do I have in January? No, cash purchases in January. No, 112. Okay. Cash purchases, January. How much? 112. How much cash purchases in February? 84. How much cash purchases in March? 84. Agree? Okay. Then I need to look at how much did I pay my creditors. Well, these are easy. I don't have to add anything here. If you had more, you could add if you wanted to, but I don't have it for this question. Alright, so I'm just going to reference it. That's how much I paid my creditor for the month of Jan. That's how much I paid my creditor for the month of Feb. That's how much I paid my creditor for the month of March. Does that make sense? Yes? Okay. Let's go back to the question. Point number 4 done. 5 done. 6 done. 7 I need to look at. Salaries and wages for staff amount to 50,000 per month. Per month means every month. Right, so am I going to have to pay people to work? Yes. Is that a outflow? Yes. People that work want a payment. Okay, you can't owe them. You have to pay them, right? Okay, so if you're a business and you're employing people, the staff that you employ need to be paid. Okay, so salaries and wages, it's a cash outflow. How much do I pay every month? 50,000 in salaries and wages. Make sense? Okay, 7 done. 8, we spoke about it. Depreciation is a non-cash item. I don't include it in the cash budget. Number 9, SARS tax paid in February 2020 amounting to 26,000. When do I pay that? In Feb. Tax paid. It was 26, eh? 26? Yes. Okay, the receiver of revenue. Okay, you have to pay the receiver 26,000. Right, and then the last one, a new server is purchased in January and will be paid off monthly starting February 2020. The total retail price was 100,000, paid off in equal monthly installments for 2 years. Okay, this requires some mathematics. Okay, so if I'm going to pay off 100,000 and I'm going to pay it off over 2 years and I start paying it off monthly in Feb, server installments per month. Right, how much am I owing? 100,000. Okay, how many months am I going to pay that over? 24 months. Okay, if you divide 100,000 by 24 months, you're going to get how much you pay per month. Does that make sense? When do you start paying that? In Feb. 100,000 divided by 24, I'm going to pay that. Okay, just for the ease of working this out, I'm going to round it off to the nearest whole number. Okay, nearest whole number. Okay, round off to the nearest digits. Okay, no decimals. Okay, 4167. Make sense? And will I pay that in March as well? Yes, I'll pay that for 24 months because that's 2 years. Make sense? Good. That's the end of the question. All we need to do now is just to summarize. Okay. Total column. How do I get the total? Add up everything you paid. Not so? That's how much I paid in Jan. Add up everything you paid in Feb. That's how much I paid in Feb. Add up everything you paid in March. That's how much I paid in March. Make sense? Okay, so if you're looking at these numbers, which is bigger, the receipts or the payments? The receipts are bigger. Okay, so that means things are looking good. All right, so to summarize here at the end, summary. Cash balance at the beginning. Net cash flow. Cash balance at the end. Okay, this is the financial management. This is the finance part of it. This is the analysis. Okay, so cash at the beginning. Okay, I didn't give that in the question. I should have, just to make it more difficult. Let's just put a line here. Okay, cash balance in the bank account for the end of December is 100,000 for this particular business, right? Okay, that'll be in the information. Okay, I've just added it. Okay, so do we know how much they started with? Well, end of December is beginning of January. Do you agree? Okay, so end of December, start of January. That's the beginning. I started with the 100,000 sitting in the bank account. Okay, net cash flow. What must I do now? Take the total receipts minus the total payments. Okay, if your receipts are more than your payments, then you're going to get a positive amount, which in this case I do. Okay, I get that figure. Right, total receipts minus total payments. If receipts are more than payments, you'll have an inflow, a net cash flow that's positive. Okay, and you would do that for all of them. Okay, obviously you round it off. No decimals. Okay, so you started January with 100,000. Did you make more money in January or did you make less? You made more money. Your receipts that you got from your sales and everything else was more than the payments that you made in January. Do you agree? Okay, so is your bank balance going to increase or decrease? It's going to increase. Okay, if I end January with 195,600, what am I going to start February with? 195,600, the exact same amount, right? What you end January is what you start February, right? Okay, because that's the continuous time frame, right? Okay, was February a good month? Yes, I made even more in Feb. Receipts more than payments. The net cash flow was positive. Okay, what you started with plus what you got during the month gives you what you ended with. End of Feb, beginning of March. Was March a good month? Yes, I made more in March. Okay, so looking at this, cash flow looks good. Positive cash budgets. Favorable cash flow. Okay, things are looking positive. All right, and that's my example, okay, showing you how to do a cash budget. Does that make sense? Good.